An example, we've recently acquired a business in the construction space. Company does 1.1 million of EBITDA. Purchase price is 4 mil. 2 million was paid at closing based on 1.7 of debt secured against the assets of the company. Primarily, that was invoice finance and some term debt. 300k incoming equity from the buyer, and 2 million was deferred over 4 years. So what assets can be used to fund that initial payment and fund transactions? Well, probably the easiest form of ABL type funding is invoice finance because it's basically, an advance against receivables. The receivables are secured, and you can borrow between 50 and 90% of this. Inventory, this tends to only work really for high ticket items. So think if you were a car dealer selling vehicles, you're more likely to get inventory finance than if you were selling $1 widgets imported from the Far East. So inventory finance is more difficult to get, can be very expensive. Plant and machinery, so in those hard asset businesses, maybe like engineering, for example, where they've got a factory, a manufacturing process, they've got expensive kit in their factory, you can raise between 33 and 70% of the liquidation value of the plant and equipment. And that's typically amortized over 5 to 6 years at 8 to 10% interest rates. Property, you can either do a sale and lease back, so you sell the property to a real estate investor for essentially 100% of whatever the real estate is worth and lease it back. Or you could leverage the real estate, so you actually acquire the business with the real estate and borrow 50 to 75% of its open market value. And typically that's amortized over a 20-year period at between 6 and 8%. So to recap, typically SMEs are sold for a 2 to 3 times multiple of EBIT or EBITDA, some on a cash-free, debt-free basis, some including cash. Working capital really is important to be factored in. It is vital. And we've talked about how you can use ABL to fund an initial payment and use seller financing and earnouts to bridge the gap and make deals work. And sometimes structure matters more than